Good morning, Predicted Trades family. Hope everybody's doing well. Had another great day in the room yesterday. So, from yesterday's prep, what we talked about is if we can hold this 39.53 zone, 39.53, 39.61. If we can hold that, we can make our way up to try to get to 4,000. We had that economic data, jobless claims that came out yesterday that started a little slip right down to our zone. And we did slip it just enough to tag the next level and then come right back up. For those that were in the room, this aligned well with our beast system. ES got down to its outer shaded region when it was tapping the lows. And on SPYs and Qs, we just got down to burger bottoms, which we'll see. But we took some longs up to 4,000, locked those up, then started a little short back. We got a drop all the way back down to where we started the day, and then we went long again to go all the way back to 4,000. Whenever we have all of our stack squeezes like this, we have to keep in mind that it will be hard to push through them. We need a whole lot of volume and momentum to just tear through them when they're this thick and when they're stacked together. So not surprising that yesterday we went from bottom to top, from top to bottom, and then again from bottom to top. The fact that we were able to fight all the way back up to highs at the end of the day was a very bullish sign. When we popped back up to VWAP, I talked about if we had a mixed signal, as in a not as much of a bullish intent, we'd probably chop around VWAP into close. But we didn't get that. We kept pushing, hit our pre-market high, came back to VWAP, and then took out pre-market high and pushed over 4,000 again. So, coming into today, we don't really have much on the economic calendar front. Let me grab that real quick. We've got some wholesale inventory revision, Fed speaker at 10 a.m., and a couple of other Fed speakers at noon. I feel like these two names aren't very important, or at least they don't ever seem to say anything too outlandish that moves the market. Not like Powell or Bullard or yada yada. So not much on the forecast for today. So things are pretty clear. We do have CPI next week on Tuesday. We've got producer price on Wednesday, jobless claims, retail sales, manufacturing index. So it looks like next Thursday and Tuesday will be the big economic release days for next week. So for today, with our push yesterday and our push overnight, we have fired all of our squeezes to the upside on all of our indices. Also overnight, we took out our trend line from recent highs in this sell-off. Over here, I've got a little 4-hour chart to show you. We had our low of years, and it started a trend line up. And it started a rally up to test our trend line from high of year. This pink line that comes across is the January and March highs. that we rejected and started this sell-off back down to the trend line from this year's lows. That's exactly where we caught a bounce this week, right? Got down there on Tuesday, nailed it, and then started the rally back that got us to where we are. Also overnight, we took out this 40-20 zone that we rejected and then rejected again. We are now above that zone and getting through our trend lines from the highs of this sell-off. So, as we look at today, we're at a key level that we rejected. From here over. So we reject. Come on. From here over. So we rejected it once. We rejected it twice. Now we're back to and through it. So as we look at where we can go today, pretty much looking for us to hold this daily 8. The daily 8 has now stepped from yesterday's pre-market high at that 30.96. It is now over 4,000. So if we have a little dip to fill this gap, I'd love for us to hold that 40.20 that was resistance. It should now be support. We can slip it just enough to tag that daily 8 and maybe 4,000, but I want to see those all hold. If we can hold above 4,000, this daily 8, maybe even hold this 40.20, the goal is to get up through this daily 50, which I know that we are above right now, but we have time before open where we could slip back down. But targets the upside, daily 50, daily 15, and daily 21, which sit at about 40.50. If we can get going past that. Sorry, hold on one second. Let's double check. Yes, our daily 100 is now sitting here with the daily 50 as well. So we closed around, let's just say 40.10. We can get up on an ATR near 40.87, key level. Yeah, on one ATR we could get to about that 40.87. I mean, past that we've got our zones here at 4100. But for upside today, as long as we can hold those things I mentioned, we can continue up to that 40.50 to test the daily 21. Past that, 40.71, 40.87. If we start to slip and lose that daily 8 and 4,000, we could see another Friday sell-off, right? We could see another Friday sell-off that got us right back down to the levels that we took off from this week. But I like to think that we have some strong bullish sentiment. We held our trend line from low of year. We can take a look at SPY, but there was also an old gap fill that was a great zone of support to set a higher low. We held that as well. We've gone from second Keltner down, and in some cases, on some things, third Keltner down, and now we are back knocking at the door of the mean. So I think we're probably going to get up to test that today before any kind of rejection back down. And I wouldn't be surprised for us to dip down and test these things. Test this trend line we broke through, this key level that we broke through overnight. So let's see, we might just hold, get a quick pop up to everything, reject back down to test things, trapping shorts, where we might catch a bounce for continuing. But we should also always be ready for a rejection of the mean and to go back down. That first Keltner sits at 39.76. So even hitting the mean and jumping to 39.76, we'll trap a bunch of shorts thinking we're going down to 3900, going into the weekend and into next week where they can rip it right back in again and trap shorts again. So we've had multiple Fridays in a row sell-offs. Need to keep that in the back of our mind. But everything looking good. And real quick before I move on from ES, one thing I wanted to point out, because we did have some discussions in the room yesterday about moving averages. Some of the new folks that joined were very interested to understand why I track the moving averages I do. One thing I wanted to point out, on Wednesday, we got back above all of our moving averages on lower time frames. We even fought our way to the 4-hour 45. We chopped around that yesterday and then started taking off. So now we have cleared all moving averages to flip to a bullish orientation on all of our moving averages. When we got through them all on Wednesday and then going into Thursday, we want to watch the time frames that we cleared and that started to flip on Wednesday, right? So the 1 hour was a good gauge to say we got through and above, flipped all of our moving averages, the 8, 21, and 45. So that yesterday, the premise became very simple. As long as we can hold those moving averages, we can continue higher. We pulled down and tested all of them. We even slipped below the 45, but we closed above it on an hourly. Again, we slipped below the 45, but closed above it on an hourly. So just kind of the way moving averages work on any time frame. Once you get a flip and a good push away from them, there's always going to be a retest back to them to make sure the buyers are still there for a continuation away from them again. So for today, you can see the 1 hour 45 now sits perfectly at yesterday's pre-market high, that 39.66. So on a 1 hour chart, we can dip down to there, even slip it, but as long as we close above, we're still in a bullish sentiment. Buyers will be stepping in there. Unless they don't. If we give it out and close below it, then it can start a cascade of sellers that roll in. Because, you know, there are algos that work off moving averages. There are algos that work off fibs. There are algos that work off everything. So, all right, let's move on to NQ. So NQ coming from that second Keltner in these last 2 days has the mean sitting just above at our next trend line from highs. I did have a more extreme trend line from highs that we struggled at yesterday but got through. Now I have a less extreme trend line from highs that sits just above, right above this daily 21 and daily 50, which are overlapping. So on NQ today, let's say we closed around 350. We can get up to about 650, which does get us to that trend line. So on NQ, I'd like to see us hold the daily 8. and I'd allow it to go as low as maybe 330, maybe 300. But ideally, would like to see us hold the daily 8. If we can hold that Keltner, that daily 8 zone of support, and keep trucking, the upside targets are the daily 100 here at this psych level of 12,500. After that, the daily 15, 560. And then the daily 21, daily 50 that sit at 12,600. Just beyond that is our trend line from our less extreme trend line from highs. For upside targets, if we give out these levels that I want to see us hold, then we're coming right back to 250 and 100. Ready. So the Ready already made it back to the daily 100 yesterday and the daily 8. Now with the gap up, it is also above the daily 50. And we are testing trend lines from those highs of the recent sell-off, right? Oh, come on. Yeah, it looks like I set up a couple of trend lines to be a first and second for the final breakout. So, today on the Ready, would like to see it hold. This high from yesterday around 1844. At the worst, the daily 100 at 1840, which is still at the highs of this week. As long as we can hold, and if we do take a dip, not saying we have to, but if we do, if we can hold and keep pressing, we have the daily 21 up above at 1875, and our trend line from highs, and that big key psych level 1900. Let's say we close it around 45 or 50. Yeah, we can get close. We'd have to have stronger than an ATR day to fully get to 1900. But it's a big key psych level 4 Ready. Kind of the upside target once we clear the mean and trend line. YM. YM. Fought up to that daily 8 and near that 31,800 yesterday, but it was resistance. Did not quite get through. Now with the gap up, we are above that 31,800. We held it multiple times overnight, and we're pushing pretty strong this morning. If we take a dip, want to hold that daily 8, that 31,800. And yesterday's highs, that's our zone of support if we do have a dip to fill the gap. As long as that can hold, or maybe even just this 31,900, we can keep trucking to the upside. Right now we're struggling with this psych level of 32,000. But we have our daily 50, daily 100, daily 21, and daily 15 all stacked together at 32,200. So you probably already know that's the upside target. We have to go into a 1 hour to see all of the recent highs and do a trend line. Oh no, I got my trend line. So we are still well below our trend line. If we can get through all of these stacked means, I mean, look at them. They were all spread way out on our rally up. And the sell-off brought all of those means into a point. So YM is going to be very critical in this push up as a gauge. Has to get to these daily moving averages. It can reject those and start on the next leg down, right? If it can get through it, it still has to take out this trend line from highs to talk about a recovery back to those recent highs. So definitely big key thing to watch on YM. When they're all stacked like that, very big magnet. If we start to give out yesterday's highs, that 800, we're going to cascade right back through the levels we held yesterday and maybe make it down to that first Keltner. Apple. Apple's still a little weak. Looked a little strong in the morning. Rejected that trend line from the previous day's highs and overnight. Dropped down to new lows on the week, but hit the daily 100. Caught a bounce and already up near yesterday's highs. So on Apple, still looking for it to hold our key zone here at 153, 154. And I'm sorry, I just remembered I talked about yesterday upping the font size to make it a little easier to see. So let me just go ahead and do that real quick. I'm always forgetting something, right? So let's see if we can hold our zone of support here. If we have a little dip to fill the gap. Ultimately looking for Apple to push up to these squeeze tops and to the daily 8 and daily 50, which are now stacked on each other at 158. If we lose that zone, back to the bottom of squeezes and to test the daily 100 again. AMD. And if you guys can, let me know in the YouTube chat. I updated OBS. Hopefully it's broadcasting a little better. I know we've had some choppy issues here and there. Come on, Toss, don't start getting slow on me. Sorry, I'm just closing a few things to try and make this a little quicker. Let's drop back down to our 30-minute. All right. Oh, AMD. Looks like chips finally woke up yesterday. AMD back above the daily 8. If we have a dip to fill the gap, looking for yesterday's highs, this 82, 83 to hold. Upside targets getting back to 85. And we have all of our stacked moving averages up at 88 for the overall upside target. Not saying we're going to get there today. It looks a little bit out of range for an ATR. Yeah, it'd have to be more than an ATR day to get there. It'll be close. So overall upside targets, all of those moving averages stacked above. They'll be stepping down kind of near 88. If we roll back and lose 83, likely coming right back, 82, 81, maybe even 80. Amazon. Oh, this trend line. So key. We set that low on Tuesday, allowing us to connect last week's low to Tuesday. We held that on Wednesday. I think that's when Richie dropped the trade alert for the 130s. That worked wonderfully on Wednesday. And it's a great job for Richie locking those up, because it looks like it was some profit taking and reloading on those 130s. Now we are above. Watch this little pre-market wick. If we do want to go back and fill the gap, want to hold that 130 and that pre-market wick, which is right near the daily 8 at that 129.5. But definite relative strength in Amazon. Already back pre-market to the daily mean and the daily 15. If we can keep going past that, obvious upside target is going to be 135, where that first Keltner is going to be close to. Let's see, we close around 129. Yeah, 133 is about a full ATR. If we roll back and start to lose this wick, the daily 8, that 130, then we're likely coming right back to 127 in that daily 50, and that first Keltner down. Kind of our level of support right now. BA. BA making a nice move off of this 150 level and almost back to 160 where the daily 21 sits. If we have a little dip to fill the gap, I want to see these overnight lows and highs from yesterday hold around this daily 8. Could slip them a little bit to get to this daily 50, but if we can hold there, upside targets 160 where the daily 21, daily 15 sit. Past that, our key levels in zone above at 162, 163. With a 5.8 ATR. Yeah, we could get there today. On cat. Decent hold of that 180 level this week. Slipped it just a little to tag squeeze bottoms. And yesterday made our way up to the daily 8, daily 50. If we can hold 184 today, looking to go up through this 4-hour squeeze top to get to the mean at about 187. Closing at 83 with a 5.8 TR, we can absolutely get to this daily 21. If we can get through that next target, this 189 and daily 15. If we start to lose that 184, then back to 181, 180. Google. Great job of holding 105 this week at those squeeze bottoms. Had a great run back on Thursday. Yesterday was kind of lagging, right? Kind of like Apple. Fought up, dropped, did not fight back up. Now we're gapping up above yesterday. This little wick should give some concern. That 108 was kind of key this week. Excuse me. So let's see if that's just one of those wicks to pick us up before we tear higher. Ultimately want to see 109 hold, the daily 8 and first Keltner are there, kind of giving us a zone of support. So if we can hold there, start to push through 110. Ultimate goal is to get to this 4-hour squeeze top and through it to 111, 112 where the daily 21 sit. If we start to lose that 109, then we can come back to 108, 107 at the bottom of these squeezes. GS. Definite relative strength in GS. Got down to that daily 50 and then ripped right back. Little dip yesterday to that first Keltner. Strong fight to the daily mean. And while the market pulled all the way back down to lows, GS held up really well. It didn't press any higher, but relative strength. Now it's gapping up above this week's highs and right at last week's highs that we sold off from. So great relative strength in GS, right at the top of a 4-hour squeeze. So we always have to be ready for a potential reversal. If it fills the gap, want to see it hold at that daily 21. You know, when we run into a wall and the lows keep getting higher, that means we're getting ready to break out. A gap up can make us come back to retest that. So ultimately, we want to see that daily 21, that 335 hold if we come back to fill the gap, with the upside target of getting to 340 at the top of the squeeze, and past that, 342, 343, where that first Keltner sits. Closed at 335 with 7-point ATR. We can get there today. JPM. Oh man. JPM, two strong days in a row. From that 113 up to the mean. Then held all those moving averages. You know, dipped below them for a second, if you can see, to test that last bounce point. And then it held all those moving averages and pressed higher, almost to that first Keltner in the daily 100. Now gapping above. So let's see if we can hold yesterday's highs, that daily 100, if we have a dip. But the goal is to get to 120, psych level, and then 122, where that second Keltner sits. If we start to give out yesterday's highs and this daily 100, we'll come back to test the bounce points at around 118 and 117. Below that, back to the mean. Meta. On Meta, decent hold of 158 this week. Not the strongest though. I mean, I'm sorry, actually I'll say compared to things like Apple or Google, Meta did a good job yesterday of pushing up. It did come all the way back, but then it pushed all the way back up and now gapping up. So some decent relative strength in Meta compared to Google and Apple. Let's see on a dip if it can hold that daily 8, 161, 162. We have yesterday's high around that 162.5. So call it more like 162, 162.5. If we have a dip, want to see that hold. And if we just keep pressing higher, first stop that daily 21 at 164, and then the daily 50 at 167. Close at 162 with a 6-point ATR. We can get to that daily 50 today. If we start to lose that 162, 162.5, then likely coming back to test last bounce point at 161, 160, 158. Microsoft. Sorry, just answering a quick message. Let's see, Microsoft. Yeah, you know, decent strength and got back near the highs and gapping up. Now above 260, which was kind of our resistance. So looking for 260 to hold on a dip. If it can't, then we're coming to test this wick at 258. But if we can hold and keep pressing, looking to get through 162 to start the journey to our moving averages above at 168. That is a bit outside of the range of an ATR today. Yeah, 264 kind of looks like the extent of ATR, 265. If we give up that 260, 258, then coming back to 254. Netflix. Oh, the one trade I am sad I didn't hit this week was that drop and then full recovery. Yesterday was, kind of chopping around these moving averages and testing, previous bounce points. So Netflix could be poised today since it kind of had that chop to take out stops, to trap people short. It could set up for a decent run today if the market's going to keep pressing. Already above this week's highs on the gap up. Not quite back to where we sold off on Friday. So as long as we can hold above yesterday's highs around 228, 228 and a half. We do have the daily 21 as well. Everything right there. All those daily 15, 21, and 8. So we could dip to those. But if we can get going through 230, let's see, we closed at 227 with about a 10 point. We can get up to this first Keltner up. Obviously, point of resistance is going to be around 234, where we've sold off from multiple times. So that is the first target, that 234. We start to give out 228, likely coming back to 226, maybe even 225. NVIDIA. Looks a bit different from AMD, doesn't it? AMD had strong day yesterday. NVIDIA, relatively strong, but not anything that was trying to break out of this range or these squeezes. We are gapping slightly up above the range and squeezes, expecting a dip to 140 to test. And then, let's see, close at 139 with an 8 point. We can get up to 147, maybe even 150. But again, not a lot of relative strength here compared to other chips. So personally, giving NVIDIA a break, especially after the not stellar earnings that kept NVIDIA selling off down below and hugging its third Keltner. So can it start to recover and come back up? Yes, but when it's not showing relative strength, I like to just take a break on it and let it find its strength. Plenty of other names to trade out there. QQQ. Yesterday, 300 was kind of the resistance, got above it a little bit, came back, got above it again before close. With a 6-point ATR, we can get up to 306 today, which is where the daily 50 sits. The daily 21 also going to be stepping down close to that. So likely the 50 and 21 are going to be pretty close to overlapping right at about 306 and right at our trend line from highs. So obvious upside target, that 306. Also need to keep an eye on that little wick that came back to where we closed. We do still have a 2-hour squeeze top in place, but it's very, very, very close to firing. Frankly, even if we just hold up here for a second and don't dive, it will most likely open and fire. So, on QQQ, looking for 300, maybe 301 and a half to hold. If we do have a dip, obvious upside target, that 306, testing that trend line. And yeah, maybe 307, 308, but these will be stepping down as this one is stepping up. All going to be converging at about 306 and a half. We do have to take out that daily 100 first. If we start to lose 301, 300, this daily 8, then we can slip right back to 298, 296. Yep. Let's see. I'll take a quick peek at these names that I skip most of the time just to see if they're even doing anything. Alright, Roku had a decent day. It's starting to look strong. So for the first time in a long time, Roku might be ready to play. But really, look, stuck in a range, dumps down, stuck in a range, then has a decent day. So I'm not going to pile into a name like this. It's been struggling for quite some time. And it's back at the mean, right? So it can maybe tag that mean, slip back, and bounce around these means. Not loving Roku, not going to play it. Shop, an even worse candidate, in my opinion, because I hate trading names where I'm fighting for 50 cents. And it seems like hours to get that 50 cents. But Shop did come off of 30, now up at 32, $2 whole bucks. And it took days. So, if you want to play it, obvious next stop, the daily 21 around 33 and a quarter. And if it gets going past that, I mean, it's not going to go much further with its 2-point ATR. That's pretty much the extent of it. So, not loving those two names. In fact, they might just leave our watch list. Because I don't think anyone's trading them. Except for a certain degen, I know. So, on snow. Again, let's see. Not loving this name a ton either, but held that 170. Now pushing up to 180. These contracts can move pretty nice. And we talked about on snow relative strength. It had a huge gap up on earnings, that it filled that gap a little bit on Tuesday. I marked this zone as what's left of the gap. The daily 50s now cut up to the bottom of that gap. But either way, on snow, held the mean, starting to push off of them. So relative strength, it did not get down to lower Keltners, right? After that gap up with the market selling off, it just came back to the mean and held. So good relative strength in snow, good investor, sentiment. They want to take it higher. So definitely a name that maybe should be watched. As long as we can hold 180, we can start to work our way up. Close at 179 with a 10-point ATR, can get to 189, 190. Back to some of these highs to test, right? So decent name. I think I'm going to start keeping a closer eye on this one as it's showing it relative strength. SPX. So lately, SPX has not been leaving any gap unfilled. So that's something we always have to be ready to trade or keep an eye on. We're gapping up 40 points. We can leave behind that gap and just keep trucking. But we've seen so many days where we start to leave that gap behind and we come back to fill it. We start to leave that gap behind, we come back and fill it. So it's definitely something we want to be cognizant of. Gapping up on a Friday after the last few Fridays have caused sell-offs. So we want to watch that. Filling the gap would be just getting back to 4,006. Still above that daily 8. So if those can hold and we can keep trucking, what did I say? We're gapping up about 40 points. So we're going to be up in these moving averages. If we do take a dip, let's see if just 40.20 can hold. Recent high that we sold off from last Friday. And the daily 50 is right there. If those can hold. We don't need to fill the gap. We can keep trekking up to all of these moving averages. The daily 15 now overlapping. Key level at 40.62. And yeah, we can get there on a full ATR. In fact, we can get a little bit further. And then next stop, past that, not saying we get there today, talking more if this continues into next week, we'll be getting to that 41.20 key level and first Keltner up. SPY. I'm sorry, I forgot to say on SPX, if we give out, let's see, if we give out 4,000, if we give out 40.20, we're coming to fill the gap. If we give out that 4,006, 4,000, then we're coming back to 39.80, 39.60. And we do have that zone below, which, yeah, if we see some hard selling, we can get back to this zone. SPY. Come on, come on, come on. There we go. So, SPY held this zone that I drew. It's an old gap fill zone. I'm going to pull it up over here to show you. But there you go. We had a little gap in our last sell-off that gave us a new low of year, right? When we started this sell-off, connecting the trend line from low of year, and I'll just show you. Oh, come on, grab that wick. There it is, boom. So, as we started this sell-off, that trend line from low of year was approaching. So I went back and found an old gap level that we resisted, then we took off. Obviously this gap got filled, but it provided such a nice level that used to be resistance, then we took off from it. So when we started this sell, I went to find that and mark it, and that was my guide this week, coming into this week on SPY. We got to that zone and held it, and that's when we started going long on everything. So nice push off of it, starting to get through trend line from highs with this overnight gap. Let's see if we go back to fill the gap. It'd be pulling back to 400 and some change, sorry, about 400 and a half. Already pretty much tapping the daily mean. We have the daily 50, 100, 21, and 15 all in this range. So if we dip, looking for the daily 50 to hold around 401 and a half, that is $1 higher than where we closed, so we can slip it a little bit to fill the gap. But yeah, on any kind of pullbacks, looking for that daily 50 to hold, send us up through the daily 21, daily 15. We closed at 400 with a 6.8 TR. We can get through the daily 15. Getting to 410 is a little bit outside of ATR today. If we start to give out the daily 50 and our close of 400 and a half, then we're likely going to slip back to the daily 8 and to this 395 and a half. Very key level. Provided support yesterday twice. So if we can't get through and we start to fill gap and sellers pile in, we're going to cascade to 399, 398, yada yada, to get back to this 395 and 0.8. Tesla. Tesla and VIX, and we'll wrap this up. Tesla this week dipped right down to that daily 100 and bottom of all of our squeezes on Tuesday. That's when we started going long on the 280s. Those provided a great trade that day, the next day, and now we're pushing up almost to 295. So those 280s that we called out on Monday could have been swung all week for a great trade, just straight on up. So Tesla yesterday, still decently strong, but like the market came back, but it did set new highs. So definite relative strength here. Already have a wick back, something to keep an eye on. So looking for 290 to hold to push us up through 295. We closed at 289 with an 11-point ATR. Look at you, Tesla. So we can get to 300 today. Definitely watch those 300s, 295s. Definitely want 290 to hold to send us higher. If we start to lose 290, if market is rolling over and selling off, coming back to the daily mean at 285, and below that, coming back to 280. We'll take a quick look at UVXY as well. Come on. There we go. Ooh, I love this. So the lows that we reversed on last Friday and started a sell-off in the market that sent UVXY up, we got right down to those lows yesterday at the highs, and now we're gapping below them. So if market does have a pullback, want to see UVXY stay below those lows, which are basically around 9.4, 9.5. As long as we can stay below 9.5 today and start to work lower, back down to 9, we can see good upside in the market today. But if we see this start to come back to 950 and break through, then we can start to see the market sell off as this tries to make its way from 950 back up to 10, where all these moving averages sit. It made it down to first Keltner. So that's what UVXY will look like today for upside or downside in the market. On VIX, and just like on UVXY, on VIX, last Friday we hit that 23.33 and took off through 25 and 26, back to these 100 moving average. So if we're going to see a downside in the market today, we will get back above the lows from last Friday, back above this 23.33, and work our way back to these moving averages above at 24, 24.5, if we're going to see downside today. But if we can stay under 23.33, get below 23, looking for VIX to get down to 22.5 and 22 for us to get some more upside in the market. And if you look left from this 22, that's also the next bounce point that we had on VIX. So we were below the last bounce point. If we can stay below that, we can try to go take out the last bounce point before that. So that's it for today. Thanks everybody for tuning in. Hopefully everybody found this helpful. We'll see you today in the chat room. Remember, it is Friday. We like to tell everybody Fridays are a day to have fun, to play with profits, size down, don't ruin your week. We've had an amazing week in the room. Every day pretty much green, I think, for everybody. So let's not give any back. Remember to size down and look for those 1, 2, 3 good trades. We usually only get a couple of legs a day, so let's focus in on just nailing those legs as we should. But good luck today, everybody, and we'll see you in the chat.